it's not the base case anymore, obviously, as it was, 60, 90 days ago.
The U.S. Fed keeps rates unchanged. Chairman Jerome Powell says further rate hikes are unlikely and it is more the base case. Indicates 3 rate cuts in 2024 as inflation eases without a significant rise in unemployment. However, he also cautions that the U.S. economy might still slip into a recession going ahead. The U.S. Fed's dovish outlook sparks a rally on Wall Street. The Dow surges over 500 points to close at a record above 37,000. The S&P 500 and the Nasdaq both rally about 1% each to close at 52-week highs. The 10-year Treasury yield drops to lowest level since August. Most Asian markets gain as the Fed holds rates and signals cuts in the next year. The gift nifty is also indicating a big gap up start for the Indian market. Crude rises as demand concerns wane after the Fed signals rate cuts in the next year. Brent trades around $76 a barrel, also aided higher by a larger than expected drawdown in U.S. inventory. The primary markets remains heated. Stationery maker DOMS Industries issues oversubscribed 2.5 times, receiving over 1 million applications on the first day, with the retail portion being subscribed 16 times. Affordable housing financier India Shelter's IPO, meanwhile, is subscribed 0.6 times as of last evening. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Well, it's all about Jerome Powell's comments last night where he spoke about 3 rate cuts which are possible in 2024, and this is something which has fueled the big rally that we are seeing. The Federal Reserve held its key interest rate steady for the 3rd straight time and has indicated multiple cuts to come in 2024 and beyond. Following the Fed decision, Wall Street ended higher with all 3 indices hitting fresh 52-week highs. The Dow Jones closed at record high above the 37,000 mark. The S&P gained 1.4%. The tech-heavy Nasdaq also surged 200 points. The 10-year Treasury yield drops to lowest level since August. Here's a report from CNBC's Steve Leisman on the key highlights.
The Federal Reserve leaving interest rates unchanged at 5.25% to 5.5%, a unanimous decision in the December meeting. The Fed says growth has slowed from the strong 3rd quarter pace, saying inflation has eased over the past year but remains elevated. It is the first time they've said anything positive about inflation for a very long time in the statement. And they backed off somewhat their bias to hike, saying it was now determining the extent of any additional policy firming, inserting the word any into the statement for the first time. They lowered their 2024 Fed funds outlook to 4.6% from 5.1%, so half a point down, forecasting on average for a Fed official 80 basis points of rate cuts next year. It had forecast just 50 basis points from a higher level. Of course, they got rid of the expectation for an additional, the forecast for an additional rate hike this year. That's gone. They lowered their inflation outlook for this year to 3.2 from 3.7 for core PCE. That's down by 50 basis points. They hit their 2% inflation target now, maybe a little bit earlier, sort of towards 2025 or the end of 2025. And they see below trend growth of 1.4% next year, a tenth less than the September forecast. Unemployment rate seen at 4.1 next year, about 0.4 higher than the September forecast. And they repeat in the statement that job gains have moderated but remain strong. Now, there's something in the dot plot that I think is worth pointing out. While that median did come down from 5.1 to 4.6, there are 5 Fed officials who are below that 4.6 number who see a full 100 basis points of rate cuts next year, and they're even more dovish into 2025. If you remember, the September forecast, there had been at least one Fed official who was above 6%. That's gone, and the top of the dot plot now for next year is now 5.40. So I would say that the Federal Reserve today took a step towards the market rather than the market taking a step towards the Fed. I wouldn't say it's an all clear on this, but the Fed definitely backing off plans to hike additionally, or making certain that it plans to hike, and also forecasting more in the way of rate cuts next year for the average Fed official than they had in September.
Okay, all right, Steve, thank you so much for joining us with all those details. Well, the story, of course, is U.S. Federal Reserve opted to maintain its key interest rate for the 3rd consecutive time. Fed Chair Jerome Powell signaled that they will have multiple rate cuts in 2024. He also acknowledged the easing inflation, and that is something that we spoke about as well. But let's listen into a few excerpts from the press conference held by the Fed Chair Jerome Powell.
Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over, that assessment really over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was, 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward, but that's another assessment that we're going to make very carefully. Inflation has eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time.
Okay, it's also time to listen into some reactions coming in for the Federal Reserve's decision.
We waited all year for the Fed to pivot, and finally, as a Christmas present, they give us a pivot. But I do believe the inflation numbers are going to be good. I am a little worried that the most dangerous time for the economy is when a tight Fed begins to ease, because those rate cuts aren't just sending a message to the market; they're sending a message to the economy. And a lot of people, if you think there's going to be much lower rates at the end of next year, you really want to borrow money now, or you want to wait a while. And I hate it when everybody decides to wait a while. That's very bad for the economy. So good news today, I think, for both the bond market and stock market, but I'm just a little bit more cautious on growth now the Fed is finally pivoted.
Action was no surprise. I don't think anyone really expected that they would raise rates at this meeting, so no big surprise there. I expected a little bit more in the statement, a little bit more of a nod to the disinflation that we're seeing. It was a minimalist statement. It didn't say much at all and didn't change much from the last meeting.
Well, it's pretty dovish. I mean, the word of the day is any. Last meeting, the word was careful. He said that multiple times last meeting. Market likes that because it respected the fact that the curve's inverted and the economy's slowing down. But that any word didn't have to be inserted. And it strongly suggests that the Fed inserted that because they believe, I think, that they're done. And not only are they done, what a lot of people don't realize is the Fed has been on hold for 4 of the last 5 meetings. So it's a trend.
Okay, that's all about the U.S. market action. In fact, most Asian markets, they're trading higher on the back of a dovish outlook coming in from the U.S. Fed. The Nikkei is actually the only outlier, trading with cuts of about 1/3%. But apart from that, if you look at some of these major indices, all of them are in the green, and there's a big surge that is underway. The Hang Seng is up around 2%. We have the Taiwanese index, which is up around 0.9%. So across the board, except for Nikkei, there's a big surge. The GIFT Nifty, that will come up for you on the screen, and that one is indicating a gap-up opening for our own markets. It's a 200-point uptick that the GIFT Nifty is suggesting right now. It'll come up for you on the screen in just a bit. But yes, that is what we are indicating as far as the markets in India are concerned. In other global market updates, investors will also be tracking the European Central Bank and Bank of England's decision due later today. Both the ECB and BOE are largely expected to leave interest rates unchanged. Okay, time for a break now. When we return, we'll tell you how these big cues overnight will impact our own markets. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Well, we have now our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Well, first up, Ekta is joining us. Ekta, looks like a bumper day for our own markets after what we saw globally.
Well, yes, Sonal, I've been hearing the start of the show, and like you put it, it's definitely going to be possibly be a record high in terms of a start for our markets, considering the risk on that we've seen globally. So the GIFT Nifty currently is indicating an implied open of over 180 points in the green as we speak, because of the dovish FOMC or Fed policy. So the rates are on hold, but what was really dovish is that there could be 3 rate cuts next year. US markets closed at fresh 52-week highs. We have the Dow above 37,000 for the first time ever. The US dollar softened. We have Asia, which is mostly in the green and surging as we speak. Brent crude, no surprises coming in, $74 per barrel for Brent crude. In terms of flows for our markets, just watch out for the institutional flows. Yesterday was probably a lot of one-offs because the FII's net bought around 4,700 odd crores. DII's net sold a little under 1,000 odd crores. And the other piece to watch out for is stock-specific action for our markets, which continues to be in focus. So while the indices will be at record highs because of the global momentum, stock-specific action would be in focus. Yesterday, for example, stocks such as REC, PFC, PI Industries, realty stocks, all of them continued to be top of mind. And we could see that kind of momentum probably continue into today's trading session as well.
Okay, all right. Those are all the market cues, but a lot of stocks to watch as well. Abhishek has that list.
Well, to begin with Fusion Microfinance, CNBC-TV18 News has been confirmed. Now, sources do tell us that Warburg Pincus will sell about 9.25% stake in the company for a consideration of rupees 500 crore. Uno Minda, the company has commissioned its new automotive seating system plant under its subsidiary. Biocon, the Bicara Therapeutics, completed US $165 million Series C financing. NBCC, they have got an order from NCDC worth about 1,500 crore. IRCTC, they are taking major expansion plans with respect to non-railway catering business. So 15 more catering units will be set across the country. Escorts Kubota, their chief officer of agri-machinery business division, has resigned. Vedanta, they will hold a board meeting of 18th of December to consider an interim dividend over there. Religare, SEBI has suspended the registration of certificate for the ARM Religare Commodities as a commodities derivatives broker for a period of 3 months. Back to you.
Okay, all right. Those are all the stocks in focus. Finally, Nigel is joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. I think Santa's coming to town, right? Just take a look at the cues that we have got. You got the US markets higher, dollar index weaker, crude oil prices lower as well. And it seemed our market sniffed that yesterday. So we had a big intraday recovery, both on the Nifty as well as the Nifty Bank. Well, the Nifty Bank, you could say that there's an element of expiry that played out there. But just take a look at that. We were down at one point of time, 130 points. We ended high with a gain of around 20 points. So 150 point swing on the Nifty itself is what we saw. Now, the options data. Today, we have weekly expiry that plays out. And you look at the 21,000 call or the 21,100 call, both of them saw a fair bit of open interest build up. And the total open interest as well is clocking more than a crew out there. So positioning is such that maybe we don't get past the 20,050 odd mark, 20,038 to be precise. That's the recent high that we've seen. And going by the options data, 21,130 odd, that should be a bit of a resistance zone. That level as well should come up for you on the screen. Well, you have the support that comes in at around 20,700 and 20,850. I say this because yesterday as well, we went to that vicinity. Numerous times have gone to 20,800. So that, in fact, is the buy zone out there. Now, the GIFT Nifty is suggesting that we see a big gap up. But given that it's weekly expiry, positioning is such that maybe, in fact, the bears believe they can defend this 21,050 odd mark. But we're going to start above those levels. So if that is the case and we hold above them, maybe we could be racing away, maybe around to the 21,200 on the spot. That's the GIFT Nifty rate that you're looking at. So on the spot, maybe we see a bigger rally. Things poised for a terrific Thursday. Let's see how this goes. Back to you.
Okay, all right. Thank you guys for joining us and prepping us up for this big trading day ahead. With that, we'll get into another break. Up next. Welcome back. You're still tuned into Power Breakfast. Let's talk about the commodity markets. There's a lot of action there as well. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Hi, morning, and thank you for that. Well, the U.S. Fed keeping rates unchanged and projecting a 3 rate cuts on cards in 2024 clearly has had most of the commodity prices trade in the positive side. Well, we also have seen the U.S. dollar decline versus the major currencies, and because many of these commodities are denominated in dollar, that also in turn has helped. So starting with the metal prices, we've seen copper prices gain up by 1% overnight. Even crude, where you've seen a lot of negatives come in, has seen a percentage point of gain in the overnight markets. Well, for crude, it also has been a tanker attack in Red Sea and also support coming in from the fact that the U.S. crude inventories have declined by 4.3 million barrels in the previous week itself. So that led to some support also. But the best of reaction clearly came in for the gold and silver prices. Gold gained 2.5% and silver is up 4.5% in the overnight markets. We have seen recovery come in from 1 month's lows for both of these precious metal prices. And if there are going to be 3 rate cuts or more than that, then you are looking at further gains coming in for the space going forward.
Okay, some more gains coming in the commodity space as well. Thank you so much, Manisha, for joining us. But quickly, let's take a look at the Asian markets because they continue to inch higher. The Hang Seng, as we speak, is high by around 1.8%, 1.3%. The Taiwanese index, too, is up around 0.1%. Actually, except for Nikkei, most of the Asian markets, they are doing really well after the stellar rally that we saw in the US markets because of an indication of 3 rate cuts in 2024. GIFT Nifty, that should also come up for you on the screen, and that one is indicating a gap-up opening for our own market. Almost 200 points higher. That is the implied open for GIFT Nifty. That's all we have on Power Breakfast today, but stay tuned. Bazaar Morning Call comes up next.